Well, I actually look at it as a basket. Ever since the one-off devaluation, the Chinese have been saying that they're increasing flexibility, keeping it basically stable. I think the problem is that most people in the market would always look at it from the point of view of the dollar China. But I look at it pretty much, from a basket. So, in fact, many of my clients, they tell me, thank you for that, because they've noticed that the Singapore, which trades also on the basket, is if you look at the Sing-China cross, it's pretty stable. So, what I'm trying to say is that the dollar China will follow the dollar indices, especially the one for emerging Asia. So, I think this is a very important point to make in terms of the, let's say, the trade tensions where emotions will run high. So I think what China has basically said is that, when they talk about they won't use it for export competitiveness, they talk about stability, they normally refer to the current account. Whereas the U.S. on the trade tension, they will always bring you back to the large, U.S. deficits, with China. And also, I think we've seen recently with Europe as well, which is why they brought back the auto tariff, threat. So I think all in terms of dollar China, we still have a forecast of, let's say, 7 sometime this year. So I like to treat this year, one, as a stress test. Emotions are high. We have a situation where the market is, moving between half empty and half full. So I think recently, especially with regards to Eurozone, they have surprised everyone with the TLTROs. So, and market started downgrading the growth again towards where the ECB has recently downgraded to. So I think all in, we need to be mindful that this is a pretty volatile period where we have the Brexit and also, the China trade deal, which are pretty much binary events. So I prefer, to adopt a stress test. So you need to, while we are hopeful for positive outcomes, but we need to know what to do in the event, that the worst of scenarios play out.
Okay, Hadley's got a question for you in Abu Dhabi.
Philip, it's Hadley in Abu Dhabi. I want to follow on to that because earlier in the show we were talking about this potential for the European ministers to come up with some sort of European budget. And then, of course, we've heard from Emmanuel Macron suggesting that there should be an EU-wide minimum wage. I mean, how worried does this make you in terms of what's going to happen next? Because you've got that plus Brexit as well.
Okay, for myself, I'm actually looking at the slowdown itself and, of course, what kind of policy responses are necessary. As far as I'm concerned, with regards to the G3, the U.S. is in the best position to respond with monetary policy because short-term rates are negative, let's say in Europe and Japan, and the 10-year is near the 0% level. So naturally, you see in the forecast, with regards to the global trade tensions, it has hit not just trade, but affected investments, and they're starting to filter into the household consumption. So naturally, there's need to be responses, to the slowdown. The ECB, I think, has done what it could for now, but most of the forecasts are pointing to, the government needs to do more of the heavy lifting in terms of cushioning the growth, from all these global headwinds.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.